Hi, and welcome to another weekly recap. So today I'm gonna recap, week 11, and yeah, today I'm gonna recap week 11. So let's first start with GU. So if you see GU, I got one losing trade in GU. So yeah, this is the losing trade that I got on Thursday. So actually, that was a good loser. I'll explain you why I got the trade and what inspired me to take the trade and why ended up as a losing trade. So in the next video, we can discuss about XAU, but for now, let's discuss only about GU. So let's jump into the board. Before that, let's check whether it's working fine. Okay. So starting with GU on May 19. So let's jump into the daily chart on May 19 and just analyze what is happening on the daily chart before moving into the lower time frames. So taking out my pen tool, here you can see that the swing structure is bullish and the internal is bearish and the price is kind of forming an buy side liquidity above. So which and also the price has mitigated into the weekly demand zone. So anytime the price can push the price up to take out all these buy side liquidity and then take out this weak swing high. So that was the expectation, but we can also see from the bearish lens that the price can push further down into the discount zone and into the extreme daily demand zone before making the move up. So that's also a valid reason why the price can come down. But let's stick to the lower time frames. So from the 4-hour perspective, we can see that the 4-hour has was bearish and price has reached the the premium of the swing structure, and it has chalk bearish, which means that price can come down to take out this low because there is no significant demands to the left, and I can assume that this is one straight push up. But this uh, push down will not be direct push down like this direct push up. It can be a complex pullback. So we are expecting this complex pullback because this gives us some good pullbacks where we can if we get some valid POIs, we can make use of it and look for sells. So moving on into the H1 chart. So in the H1, the story is totally different. The H1 we are seeing a boss bullish and price swept the sell side liquidity and pushed the price up. And this becomes some sell side liquidity, and this is a valid demand zone. Why it is a valid demand zone? Because this is definitely not a valid demand zone because it's a straight push up, does not have any inducements. So this uh, there could be a lot of sell side liquidity below, and below the sell side liquidity we are having this demand zone, so which makes it much more high probability than this one. And also it has swept liquidity and it has also got inducement. So these two criteria itself makes the POI very high probability. So at 9:38, so what happened is uh, okay, this is actually a session update, not 2 hours passed. Okay, that's 9:38. We can see that the H4 has internally was bullish, which means that we can expect the price to push down, or we expect the price to continue pushing up. So that totally depends on how the H1 price action behaves. So on uh, okay, yeah. So at EOD, what I saw was the price at chalked bearish, which means that there was no trades today. But we can assure that there would be trades the next day because with this sell side liquidity below and the price at chalk bearish, which means this is a very good POI with having an inducement right here. So price can push up, and then you can expect the price to come down, at least make a complex pullback. So we end our day expecting the price to mitigate that supply and push the price down. So before entering into the May 20th, uh, let's start from the daily chart of the May 20th. So again, there is not much of interesting thing in the daily chart. It is still in the same area of value. But one thing is sure that price at chalk bearish. So we can expect price at chalk bullish. So we can expect the price to come down to mitigate into this daily demand zone because this demand is currently holding the price. So same from the 4-hour perspective, 4-hour as internally was bullish. So we expecting to play the internal pullback of the 4-hour chart. price stock bearish here, and it has formed kind of equal lows. Perfect, and we know that this is a very good POI from which the price can react from. But I'm not expecting the price to mitigate that. Before, price can also chalk bearish before that and form a fresh supply from which the price can react and push the price down into the daily demand zone. So daily demand is where the price can react from, but we know that the price can go all the way down to take out this sell side liquidity. But let's see what happened. Yeah, price mitigated the supply and it chalked bearish. So looking for sells is valid. Okay, why I didn't take an confirmation entry with this POI? So that's a very good question. Mm, you can see that this is not a high probability uh, close. This is just a weak close, and the price had failed to multiple times. The price had failed to close below this low, which means that this high has failed to taken out this low, which means this high can be taken out, which means this POI is not that much high probability when compared to the price taking out this low. So the safer option is, so two things can happen. Either price can respect this price can respect this POI and then push down to mitigate into the daily demand, or price can flip this POI and then you know after flipping it, it can then form uh, it can continue the bullish leg and then it can form the bearish shift later. So two things can happen. So the only safe option that I was having is, so to look for a chalk bearish and then to look for sells. So that's what I did. When the price chalk bearish, I started to look for LC1s at 1125. I had a clean LC1. Okay. Okay. Think I didn't update that one. So let's jump into the trading view chart and see what happened on that day. It's May 20th, right? Okay. May 20th. Yeah. Here is the price action. Here is a piece of price action that you can see. So price actually chalk bearish, H1 chalk bearish, and this is the POI that I was interested in looking for sells. So let's jump into M15 to see what happened on this day. So yeah, price did not take out the lid, so there was no LC1 and the price pushed down. So was there a confirmation entry? So let's check it out here itself. This was the POI and the price mitigated the POI, and there was an LC2B, to be honest, but I'm not interested in taking those kind of trades, especially when the POI is formed yesterday. So yeah, so there was a valid LC2B where that could have been taken, and if that is taken, this would have been my entry, and it could have been a profitable trade, but I didn't take that one. So probably you can say that this as a missed trade. So if I take one biff stop loss of still it has run for 4.7, which is still a profit. So you can call this as a missed trade. So yeah, I can say this is a missed trade. If uh, if I was a little bit aggressive, I could have taken this trade, but that aggression must continue in all the trades. So not this only trade, but it should continue in all the trades. So let me quickly take a snap of this one, and I can say this as missed trade 250 Tuesday and paste it right here. Cool. So continuing on May 21. So what happened on that day? Um, yeah, price pushed down, and 15 it came down, so the session ended, profit was gone. Price didn't mitigate the daily demand, but the next day while coming to the market, price took out the H1 swing high. So we had actually had a boss bullish. So let's continue in the chart itself. Okay, here we go. This is how the price looked at the next day, Wednesday. So now clearly there is some kind of a strong bullish momentum. So this is a very good demand from which the price can react from, because it has got some inducements right here. So I can look for sells, look for buys from this demand zone. But let's confirm that with the lower time frames. See, from the 4-hour perspective, we can say that the H4 is the swing structure is bullish now, and the internal is also bullish. So I can expect the internal structure to continue till we get a strong bearish shift, and then we can expect that the swing pullback has started. So we can play sells till the price reaches the discount prices. So for now, looking for buys is valid. So since the price, so this is the sell side liquidity which I am expecting the price to take out, and this seems a valid POI with inducement. So if the price reaches this POI, then I can look for M15 confirmation entry or LC2X models, and then look for buys. So price actually invalidated this POI and mitigated this extreme small uh, demand zone which was actually formed during the spread hours. So I was not specifically interested in looking for buys directly from this POI. So I was waiting for the price to chalk bullish before looking for buys, because this is not a high probability POI which I look to trade directly using M15. So initially I thought the POI below the Asian low was low probability, but price actually respected it and pushed up. The main reason for not taking buys from that POI is that price chalk bearish. One more reason is, yeah, price actually chalk bearish right here. Here you go, chalk bearish with momentum. So chalk bearish with momentum, with lot of momentum, and with strong rejection. So strong rejection. So this could indicate that the sellers stepping into the market, but later understood it was just a manipulation to trap the sellers. In fact, there was a clean LC1 which would fetch 2.3 R if there was no stop loss buffer and displacement buffer. But that's not a part of my trading plan, so I'll skip that. So what I'm talking about trade from here. So there was a trade from here which I did not take because the LC was very big. Currently, price is consolidating between the supply as well as the demand. So price is ranging. So here we go. To give you a better understanding, this is the LC1. Yeah. Uh, which I did not take. Why I did not take? Okay. Okay. Probably. Okay. Yeah. Probably that could have been a break-even trade. I'm not sure what happened, because I used to manage both my professional as well as the trading. So sometimes I get confused. So this is actually the trade that I was talking about. So price mitigated the supply, and yeah, now I remember why I didn't take the trade. Yeah, right. So actually I did not mark the supply. I did not mark this as my supply. So yeah, I did not mark this as my supply. I marked on this as my supply. So price did not mitigate this supply within the session, so I didn't take the trade. Right. Now I got it. But if I have marked the entire POI from year to year, then I would have got the trade. So this is actually the POI, not excluding this wick, including this body, then I would have got the trade. But that means that this POI is already mitigated. So it's a multiple mitigation and a failed reaction. So that makes the POI very much low probability. Then also I would not have taken the trade. So this is how the 4 hour looks. So the price is consolidating, and this low, this high failed to take out this low and started to consolidate, which means this high becomes weak and it can be taken out. So yeah, let's jump into May 22. Hmm. So what happened on this day is the daily almost took the buy side liquidity of the swing high. So we can expect this bullish structure to continue to close above this daily swing high. And since the week is full of bullish momentum, I'm expecting the bullish momentum to continue. So price coming down to mitigate this demand zone is not a condition that would happen on this week. So moving on into the 4-hour chart. 4-hour, the swing structure is boss bullish, and the price started to consolidate. So we can expect that the price to come down to mitigate this demand zone and then push up, or price can just continue to push up to take out the buy sell liquidity above and make another boss internal boss bullish. So this is how it looks like in H1. So ascending triangle pattern, and we can, and the price, and the if you look at the internal structure, the structure is currently bullish. So I can expect this demand to hold and the price to push up, so I can look for some direct entries right from this demand zone. But there is also a possibility that the price can take all the sell side liquidity and then chalk bullish and then push up to take out this high. So let's see what happened. And yeah, price actually took out all the sell side liquidities, but it did not reach the 4-hour demand zone. So I expected that this could be a fake break and the price can continue further down to trap some more early buyers, early buyers, and then it can push up and take out the buy side liquidity. So I decided to look for sells right here, and yeah, this actually becomes valid when you see it from the bearish lens. So here we go, the price chalk first bullish and then it chalked bearish, and in the session we got some strong bearish push. So with an equal loss and an unmitigated demand below, so obviously you would opt for looking for sells. So I did the same, and there was a fake break liquidation. So fake break and the price pushed up, so this is where I kept my trade. So few things to consider from the bullish perspective is, so this POI right here is formed via sweep of liquidity and a strong momentum push up. So this POI can hold and push the price up, and it can hit my stop loss. And the second thing is, there is equal highs above. So there is a possibility that the price might uh, push further up to take out this buy sell liquidity and then push further down. So any of these two things can happen right now. And yeah, it happened. Price did not mitigate this POI, but it mitigated the fair value gap, and then made a strong rejection, pushed up, took out my stop loss, and it eventually came down. Probably, yeah, it eventually started to come down. So this is a trade recap. You can go through once, you can pause the video and go through once, but yeah, it is what it is. So moving on into the next day, the last day of in the GU, Friday. So here we can see that the price made a small pullback, which means this could act as sell side liquidity, and this is a valid POI from which I can look for buys. So moving on, here we go. Price is about to take the 4-hour buy side liquidity, so I can look for buys. If there is any, to look to target the high. So here we go. This is an H1 POI, which I expected the price to mitigate, taking out the sell side liquidity below, and but the price did not take that out. It's directly pushed up, so there was no trades today. And eventually, there was a weekly supply, which the price mitigated. and I expected, that there was an expectation of the price to chalk bearish so that I can play some swing pullback into the discount prices. But price did not swing pullback. The low became strong and it held itself, and the price continued to push up. So probably next week we can expect the price to make a swing pullback, or at least a chalk bearish, so that price can make a swing pullback and continue to push up. Or since the price had mitigated into the weekly supply, price can push down into the daily demand zones. So two things can happen. So that's a total entire story for next week. For now, I just got one losing trade and it's a very good loser. So yeah, see you on the same day. Gold. Cheers. Hello and welcome to the weekly recap. So this is the weekly recap of week 11. So it's from May 19 to May 23 of gold. So just now we finished GU and we saw that I had a losing trade. So from the gold perspective, I did not get any trades on this day. I mean, on this week, probably there could be some missed trades. I just analyzed it, but I couldn't find anything. So let's reanalyze it live with you people so that I may find some missing trade. So the same happened on GU where I found a missing trade. So it could happen in the XAU also. So jumping into the whiteboard, here we go. May 19 XAU onto the daily time frame. So here you can see that the swing structure is bullish and the internal is bearish, but the price had mitigated into the weekly demand zone. So what we can expect, and there is also strong rejections out here. So what I can expect is price can push up and take out this buy sell liquidity, mitigate into the supply. So two things can happen in the supply. Price can either respect the supply, push further down, make another bullish, continue the bullish, the bearish internal structure, or the price can give a fake reaction and flip this supply zone to continue pushing up to take out the weak daily swing high. So two things can happen on this day. Cool. So for now, what we know is price can go up, take out the price and liquidity above. So that's the only thing that we know currently. So what we can do is look for longs. That's it. So here we can see that the price had chopped bearish, chopped bullish already, and it has mitigated into this area of demand zone, and it did not take out the high. So yeah, probably today this high will be taken out, and this is the drawn liquidity that we are expecting the price to take out. So from the one-hour perspective, we can see that the H1 is the swing structure is bullish, price has reached the discount prices, and the price had chalk bullish. So now I can expect this Asian low to be taken out, and there is this good PY to which the price can respect, and price can come down, and I can look for some M15 entry models right here, and the price can push up, and the daily buy sell liquidity can be taken out. So before that, we can also see that there is some kind of equal highs being formed, so that can also be taken out. So it's a high probability trade if the price mitigates the POI. Here we go. There is a risk factor of the price taking out the Asian low and invalidating this POI, but this POI is still valid because it has got some inducements right here. So, but the price did not mitigate this POI during the session. So it just made a strong rejection, taking out the sell liquidity, but it did not mitigate this POI. So as a result, I did not get any trades on this day. So probably tomorrow, what we can expect is price to mitigate this demand zone, chalk bullish, or I can look for direct M15 confirmation entries, and then I can look to target this equalize as well as the daily draw on liquidity. So this is from May 19. So let's jump to May 20. So is May 20 is same. The price is in the same area of value. The buy sell liquidity is not yet taken, and price is still off from the weekly demand zone. Moving on to the 4-hour chart. Same, the buy sell liquidity is not yet taken, and there is still some equalize, and the daily buy sell liquidity is there. So there is nothing much changed in the 4-hour chart. So coming to the H1, so here we go. The price at swept the Asian lows, but I need some confirmation that the price is gonna go up. Yes, the price has taken the sense and liquidity, so price will go up. Price has high probability of pushing up, but to be confirmed, what we actually do is we wait for the uh, supply that is holding the price to fail, or in general, the POI that is holding the price to fail. In this case, this supply is holding the price. So what I am going to do is wait for this POI to get failed. So once the POI gets failed, so there would be a flip zone that would be formed. So I can wait for the price to mitigate this demand zone, and then target the buy sell, the equal highs, first the equal highs as well as this daily buy sell liquidity. So analysis is simple. So let's see what happened on this day. As expected, price flipped this demand zone. So this would be the valid demand, and this is the most refined one, what I just drawn here. But unfortunately, price did not mitigate this flip zone. Once it flipped the supply, so it there was some buy sell liquidity, mid sell liquidity here. Price could have taken that, made a short push down, and trap or all the early sellers, and it could have pushed up, but price did not come back to this POI, and it just skyrocketed up. So it's not always that we get the trade, but sometimes when it happens, we must be in the charts to take those opportunities. So it is what it is. It did not happen. So again, from the daily perspective, the daily is still in the same area of value. The price at chalk bullish in the daily, and which means that we are having a new daily demand zone that is holding the price. So moving on to the 4-hour chart. From the 4-hour perspective, the price has reached into the 4-hour swing to the premium prices, and it's almost mitigated this area of supply. So two things can happen in the supply. Price can either flip the supply and continue pushing up because the price is coming off from the tail, from the weekly supply, the weekly demand, or the price can chalk bearish, and then it can push further down and continue the 4-hour bearish swing structure to mitigate, to make a deeper mitigation into the weekly supply onto the daily supply. So two things can happen. So just wait for the price action to play out. So this is the 4-hour supply, which I'm expecting the price to mitigate first at least. So I can play this bullish play. So expecting the price to mitigate the 4-hour supply. So this is sell side liquidity. So if the price sweeps the sell side liquidity, so this could be a valid POI from which I can look for M15 increase. It's a quick in and out trade, guys. So wait for the price to mitigate this demand, and once the price reaches this 4-hour supply, I would break even or try to close most of my position in this area of value, because two things can happen. Either the price can flip this supply, or it can respect this and push the price further down. What happened actually? Price actually mitigated this POI. That's great. But did I take the trade? That's no. Why? Because the the liquidity candle was very large for me to take the trade. So if you want to know what actually happened, so here is the entry. A fake break liquidation came out, but this LC candle was too large. It was around 24 pips, but my as per my rules, liquidity candle should be around 8 pips to 18 pips. So that's the limit that I set. If the liquidity candle is less than 8 pips, then I'll set extra displacement and stop loss buffer. In this case, it's almost 24 pips stop and 24 pips liquidity candle. So I was not interested in this trade. And suppose if this candle had swept this low, then this would have been my liquidity candle. I would have placed trade right here, but that did not happen. So it is what it is. The price played out, the idea played out, price mitigated the POI, and there was an LC2A, but I was not able to capitalize on that because of a large liquidity candle. So it is what it is. Just learn to move forward with yourself. So at the end of the day, um, price took out this, probably this high could be taken out. So the next target would be this supply, and this uh, buy side liquidity. So what I can do is, keep looking for buys till the price reaches this buy side liquidity. That's simple. Okay. Moving on to May 22. So price is still in the same area of value with the price chop bullish, and the daily demand is still in place, means still holding the price. From the 4-hour perspective, we can see that the price has already reached the premium prices, and it has taken out this buy side liquidity, and this is not the valid POI because it's already been mitigated. So these two form a kind of low resistance liquidity, and these two form inducement for the POI above. So I'm expecting the price to push further up to mitigate into this POI. So once the price reaches this POI, then two things can happen. Either the price can uh, make a strong bearish shift and continue the bearish leg till it takes out the swing low, or price can flip this supply and push the price up. Why? Price is coming off from the weekly supply, which is very strong, but weekly demand, which is very strong. So from the H1 perspective, we can see that below the Asian lows, there is a very good POI. So I can look for M15 entries from here, then I can look to target the buy side liquidity above. So the idea is simple. But price actually made bearish IBOS, so that actually surprised me. So now I was in a state of confusion whether the price would take out the buy side liquidity or not. So just go with the flow. Since the price took out price made an internal uh, bearish boss, so I can expect this internal structure to continue till the price reaches the discount prices. So once the price reaches the discount prices, then I can expect the price to make a strong bullish shift and then continue the bullish structure till it takes out the weak swing high. So that's what the expectation is. So for now, what I know is there is some inducement, and above the inducement there is a POI which the price can mitigate into and then push the price down to take out the weak internal look. So that's trade for tomorrow. But from the 4-hour perspective, if you see that, we can see from the two lenses. One is from the bearish lens. If you see price at chop bearish, and you can expect the price to mitigate this supply and continue pushing down since there is no demand to the left. You can expect a deeper mitigation till the price reaches a valid demand zone. So from the bullish lens, if you see from a bullish lens, you can say that this is an internal range liquidity sweep. And once the sell side liquidity is sweep, the next obvious target would be the buy side liquidity. So the buy side liquidity is lying right above here. So I can expect the price to take out this buy side liquidity. So we can view this from two angles, but let's not, um, be stuck into the analysis paralysis. Just stick to the H1 session directional bias. So from the daily perspective, again, the price chalked bearish, price chalked bullish, the daily is still holding the price, the demand is still holding the price, and there is price yet to make a strong pullback into this demand to continue the push up. So from the bearish perspective, if you see the price at chalk bearish, chalk bullish, and it has reached the premium of the internal range. So we can expect the internal structure to continue to mitigate the daily extreme demand zone, and then maybe we can see a strong bullish shift so that the price can push up to take out the daily swing high. So here we go. From the 4-hour perspective, price at chalk bearish, and the price is in the 4-hour supply zone. So now will you look for sells or will you look for buys, expecting the supply to fail? So what I look for sells, since there is no demands to the left. So probably I look for sells. if and only if the H1 chalk bearish. If the H1 does not chalk bearish, then obviously this supply would fail. Then I can change my bias. So that's what happened. So from the H1 perspective, the cells become much more high probability because the internal structure is bearish and there is an kind of relatively equal low resistance liquidity being also being generated, being engineered and price mitigated into the supply. So as said in the 4-hour chart, two things can happen in this PY. Price can either chalk bearish and then take out the sell side liquidity, and continue the internal structure, or price can flip this uh, supply and which if it does that, then this would be my new swing low. So let's see what happened. Price actually invalidated the POI and it liquidated the high. So this does not make this does not mean that the price wants to go up. It just liquidated it. So this could be a strong rejection, and if the price chalks bearish, then I'll be looking for sells, till the price reaches this demand zone. And there was a clear bullish shift. So that POI got invalidated, and the price took the buy side liquidity above this below this PO1. So price is yet to reach this supply. So once the price reaches this supply, so again there would be two options for me. One is wait for the price to chop bearish and look for the phase D shorts. Otherwise, wait for the price to flip this supply. And once the price flips this supply, then you can look for the buys from the flip zone. So yeah, so these are the two scenarios that could happen. So to summarize, gold, I was trying to um, you know uh, the main idea for this week is price is coming off from the weekly supply and trying to play the bullish run. So price actually kept bullish throughout this week, but and I got one opportunity to look for sell, to look for buys, but since the liquidity candle was very large, I did not take the trade. So suppose if you are entering using H1 Christian tree, then you would have got the trade. You would have got the trade, and that would have been a profit for you from the gold. But for me, that's not in the rules, so I didn't take the trades. So cool. Yeah, nothing from here on gold. So it's a pretty decent week from the gold perspective, and from the GU perspective, I missed one trade. Um, and I missed one trade. So you can't call it a missed trade. I was not that aggressive that I used to be in my previous sessions. So I was a bit conservative, and that led to missing a trade. Yeah, it is what it is, and I also got a losing trade. So I was conservative when I took that loser, but it is what it is. It is if that meant to be happen, it would happen. So yeah, I end the recording with this note. I know this is a very long recording, so thank you for your patience. Have a nice day. Cheers, guys.